expert hand of our first keynote speaker. She was formerly a regional director and head of project leasing of a Fortune 500 property consulting firm. She was also a general manager of Regis Manila and was instrumental in promoting the concept of co-working and plug-and-play spaces in the early 2000s. She is a strong advocate of women empowerment and has chaired the Women in Business Committee for the European Chamber of Commerce in the Philippines. Now, with a Bachelor of Science in Tourism degree from UP Diliman, she also took up the Management Development Program at the Asian Institute of Management, a Master of Business Management at UP Manila, and a Management Executive Program at the National University of Singapore. Ladies and gentlemen, I give you the one and only CEO of the Lobien Realty Group, Sheila Lobien. Sheila, the screen is yours.
Thank you, the Fort, for that very generous introduction. As shared, I always feel at home here at the Manila Times simply because I have friends with me. And today is that thank you again, Clink and Blanca, for always having us here and for allowing us to always share what we see in the market, especially in the real estate market today. So before I go on, let me just share my slide and we'll give you an update on what's happening out there right now. The Fort, you can see my screen. Good. All right.
It's visible.
Okay. So, I'll leave the technology bit to AJ, but what I'd like to share this morning is, of course, an outlook of what's going on in the office market, which we see a lot of news lately about, BPO being allowed to work 100% work from home, and then POGOs, the controversies surrounding that. Of course, I'll also talk about the residential market, the warehousing market, which is booming today because of the growth of, the growth in e-commerce. And then finally, give you some of our key takeaways and how we see things moving forward. So I'll start by sharing you again the COVID impact on the Philippine economy and real estate. As you can see, and as I've always shared, the property market is always very sensitive with the economic performance of our country. And we've seen that the steepest decline that we've seen was, of course, in 2020, but we recovered quickly. And today we're back at the 6% levels in terms of our GDP, and several economic managers such as Asian Development Bank, World Bank, and several other managers out there are already seeing that, we will grow further in the coming years. And these are all good news. And we feel that because we see the movements out there, the malls are packed again, traffic's everywhere. These are all positive signs. And in terms of global, growth, you'll see that the Philippines is actually one of the best performers in the ASEAN market. Of course, Vietnam is doing well, Indonesia, but we are also leading in terms of growth. So these are all positive news for us. Here are some economic indicators that we also always monitor. And everyone knows that inflation is one of the concerns today. However, in the next 12 months, the forecast is that it will decrease. And that will be good for everyone, definitely. The OFW remittances is back again and growing. And if you've read the news yesterday, our current president, Bongbong Marcos, is actually encouraging a lot of OFWs to continuously invest in the real estate market, in the condo market, buy homes here in the Philippines, buy condominiums, invest, do small business or big business just to, of course, prop up the economy. And we've got a lot of help from the OFW remittances. Last year, it was at almost 35 billion US dollars, flushing in the economy, fueling the market. Employment rate, again, is back at the 90s level. People are back working, and we see that restaurants are again full. People are shopping, people are spending. There's this revenge spending, revenge travel. We see that all over. The Philippine Stock Exchange Index is also, in a way, very positive right now. It's moving and it's growing, improving year on year. It's a very good indicator of the sentiments of the private sectors, and it's telling us that the companies are again doing well and are very well, not very, but quite optimistic about what's happening in the market today. Now, us in the Lobien Realty Group, we constantly monitor this real estate economic indicators. And when you look at the GDP from construction, it's moving up, meaning companies, developers are again building either office space, hotel, malls, etc. And you see that when you go, let's say, to the Bay Area, there are a lot of construction going on in Quezon City, all over the Philippines and all over the metro. Real estate loans, it's steadily increasing, meaning people are borrowing money from the bank to invest in the property market. Building permits, the construction permit, we monitor that, and it is also increasing if you compare it from previous years. And that means, again, the confidence of the developers are quite strong, and they are building and constructing houses. We've heard from Ron earlier. He is seeing a lot of sustainable projects in the provincial areas and here in the metro. Interest rate, though, is moving up. In the last how many years, it was down. And this is a way, of course, of the government to also pull down the inflation rate that's happening in the country right now. Now, let's go and look at what's happening in the office market. There are a lot of talks right now. And if you are following this, so many things are happening and people are saying, hey, Sheila, what will happen in the office market? Will people still use it, need it, etc.? So these are some of the concerns. And we see a lot of people who are now again back to work. So this slide, what's the story here? It's quite a busy slide, but what I'd like to share, what we would like to share is that, again, the office market is sensitive to what's going on in the economy. And if the economy is doing well, our GDP is high, rental rates is also moving up, simply because, when the market is good, companies will employ, would need office space, people have money, they'll buy properties, and therefore prices of land, prices of property, rentals also will move up. Now, when the vacancy is also high, like what we are seeing right now, meaning some office spaces are not taken, then rents also somehow softening or going down. And you can see here that during the peak of the market, and we've seen that right after the global financial crisis. So from 2009 up to 2019, we've seen the highest rental in the market. And the vacancy rate was quite low, single digit, 5%. It's like almost all the modern brand new buildings in the country or in the metro are fully leased. And the rentals also went really, really continuously up. So what was supplied in the market were taken right away. It's demand driven, and big developers, such as one of our sponsors today, Mega World, have been building properties left and right all over the country, all over the metro. And what has driven them is because of the growth in the outsourcing industry. When the global financial crisis happened in 2008, companies in the US, in Europe, in Asia started to look at the Philippines and outsource their back office work to be more efficient, to be more agile. And the rest, as they say, is history, right? So from the 2010 upwards, we've seen the growth in the, not just in the, office market, but in the whole Philippine market in general. So again, today where we are, 19% vacancy rate. It's not single digit anymore. It's 4 times higher compared to the pre-pandemic levels. And what we are trying to say here is that today is officially a tenant's market. So it's the best time to negotiate with building owners, landlords out there, and to look at the best buildings out there, to locate there and get a good deal. So that's the takeaway from this slide. Next is we'll look at the supply. What's happening out there? The developers. There is always a relationship between vacancy rate and number of office spaces or buildings that are being constructed in the market. And we've seen this during, the Asian financial crisis, global financial crisis, when the vacancy rate went up, meaning when there are a lot of vacant spaces out there in the market, big developers also, of course, will start to stop building because no one will take their office space or their buildings, right? And therefore, we've seen a decline in the number of buildings that are being built in the market in the during the global financial crisis and the Asian financial crisis. But when the market moved up again, like in 2010 onwards, when the BPO industry have really grown tremendously in the past, pre-pandemic, we've seen also the highest number of office spaces being built in the country, especially here in Metro Manila. And at one point in time in 2017, up to like 2019, we've reached 1 million square meters of office space being entered, being flushed in the market year on year. So now again that there's this pandemic, again, the construction of office spaces has somehow slowed down. And there are a lot of vacant spaces out there, definitely because of this hybrid work. People are still not really going in the office. There are some concerns out there. So if you want to know how big is this vacant spaces, 19% is like 2.5 million square meters of office spaces today. And it's like, having a Makati or BGC almost vacant. So that big, but it's spread all over Metro Manila. So rental rates right now is quite soft. Landlords are flexible, and that is why it's the best time for big companies out there, local firms, multinational firms, business owner, to go back to the negotiating table and then ask for a better deal from your landlord developer, because it's better to have a tenanted building than an empty building. And again, as shared, 19% vacancy rate. But these are, there are some good news already. If we are to compare third quarter 2020 versus third quarter 2021's performance in terms of take up, 8% only last third quarter 2021. But today, we've seen doubled 16%. And because of, companies are asking their employees to go back to work. And we see that. That's why we are also here in the office today. So the take-up has doubled, and this is good. However, in terms of rental, it has gone down a bit from 1,170 pesos per square average. It's down by 20 pesos, so 1,150 pesos average per square meter across Metro Manila. And if you want to know where the supply, are coming from, bulk of them are still in Makati, followed by Taguig, Bonifacio Global City, the Fort, and the Pasig area. And in the next 3-5 years, we see a lot of office supply coming from Quezon City, because there are a lot of developable land in the area. Bay Area, you see that. It used to be the favorite of the POGO, and there are a lot of developments out there as well. And then Makati, of course, the preferred, up to today, preferred business district after, or sometimes BGC Makati, they're quite equal nowadays. So this is the supply in the next 5 years. Demand drivers who are taking the office spaces out there, still the same, the outsourcing industry, they're leading the way. And pre-pandemic, the POGO market also, they were taking office spaces heavily. Today, it's not the case. However, if you are to compare 2022 versus 2021, we see an improvement in the take-up of the gaming industry, the online, the POGO market. So from 1%, it's now back again at 7%. And as we all know, we're still the number one country when it comes to voice. We are still in the world stage. And I've said that several times. And when there is a crisis, the Philippines somehow, in a way, is benefiting, because the outsourcing industry, definitely companies will outsource to be more efficient. And many companies in the US, in Europe or Asia, they will look at the Philippines to outsource their non-core work to be more efficient, to be more agile. And that's why we are still the number one in voice and in non-voice, and second when it comes to non-voice, the engineering work, the higher value work, India is still number one in that respect. Now, in the provincial market, there are also office spaces being built there. I would say 20% of the total stock are actually spread all over the Philippines. And what's driving this, of course, is the growth also in the outsourcing industry. So these are the township mixed-use developments, and our sponsor, Mega World, actually, they have a lot in all of these places. So mixed use, wherein you live, work, and play in one area. It's actually sustainable too. And it's not a trend. It's going to be like that moving forward. So the vacancy rate in the provincial area is higher compared to Metro Manila. The take-up in the last 12 months also is not that high, simply because there are a lot of people who are still working from home, and the rents have really not gone down. So it's always a wait and see. Landlords, they have to adjust a bit to lease their properties today. So when you look at the rent in the provincial area, it's half compared to the Metro Manila market. So if there are a lot of outsourcing companies who go in the provincial areas to tap fresher and affordable labor market, and at the same time, more affordable rental rates as well. In terms of supply pipeline as well, if you want to know where are the offices outside Metro Manila, Cebu, of course, is number one because of all the infrastructure, the build project that we see in the area. So it's not like a provincial area anymore. It's really a city. They have a lot. Followed by Davao, because the previous administration, of course, marketed or promoted, I'd say, that area. There are a lot of movements back then. And of course, very near Metro Manila is Pampanga, Clark area. In the next 3 years, we see a lot of new supply or projects or office spaces that again will be built in Cebu, followed by Iloilo. A lot of outsourcing companies, they also like the area. And of course, Clark, or Pampanga area, which is very near Metro Manila. In terms of vacancy, definitely Cebu has a lot, followed by Iloilo, and followed by Pampanga, and then Iloilo. Now, in the residential market, and I'm sure all of us are interested here because we have either a house or a condo that we own. So if you look at the Bangko Sentral ng Pilipinas Residential Real Estate Price Index, the circular thing there, it went crazy in the last 2 years. Pre-pandemic, the prices, of course, were moving up. But when the pandemic hit, of course, the market price of properties, either single detached homes, duplex, townhouses, condominiums, went a bit crazy. But somehow, as you can see, the prices have stabilized. And what you'll note here is that when you compare third quarter 2021 pricing compared to third quarter 2020 pricing, we've already seen an increase of 5%. And that is good news, right? Prices, again, are slowly improving. However, the opportunity here is that it's still low compared to pre-pandemic. So what's in it for us? So for those who are actually interested in looking at buying a home or a condo, it's still a good time to source and look for one because prices of properties are still relatively low compared to pre-pandemic times. So look at those opportunities. Average residential prices as shared. So condominium went up 5% and the house market went up 3%. But there are still a lot of opportunities in the red locations there. Those are the areas that are still doing, below pre-pandemic levels. And you should scout for properties in those areas. And if you need help, you can call us. And then the tourism and hotel market, the hardest hit subsegment of the real estate market. And tourism is very close to my heart. As the fourth mentioned, I graduated from UP. I took up tourism because I really love to travel. And because of this lockdown in the past, tourist arrivals in the country obviously went down. Pre-pandemic, we have seen the highest in terms of tourist arrivals. So 8.2 million visitors in the country. And we thought it will go, up and up and up. Unfortunately, no. And it went down to less than 1.5 million in 2020 because, of course, people cannot travel. It went down again in 2021. But the good news is the first half of 2020, it's already higher compared to the whole year of tourist arrivals in 2021. And that is the revenge travel, right? I really want to go out of the country already, or the Philippines and see, in the provincial areas and see some, new places. But I'll talk to my husband. He still doesn't like to go out. So now the revenue of hotels in the Philippines, the hotel industry, they're very optimistic. And I attended a recent hotel conference here in the country, and they're quite optimistic. And there are a lot of, 5-star premium hotels that are being built now in the country. And in the next 3 years, they're forecasting that they'll be able to have a pre-pandemic revenue levels in actually next year. So we hope that that will really happen. This is from the Department of Tourism, the numbers that we are showing here. Now, the warehouse and the storage market, the brightest spot in the Philippine real estate subsegment, because, everyone's buying things online. It's growing. The forecast is that it will grow by 8.2% in the next 3 years. And we see that a lot. People are buying things online. The entire logistic and warehouse industry is projected to reach 1.1 trillion in terms of revenues in about 2 years' time. We're ranked 60th out of 169 countries in logistics performance. So there is a lot of room for growth there. And I'm sure the current administration will continuously work on this, the Build project, etc. As shared, it's growing because everyone's buying things online now. And even in the property market, and later on, our second speaker will talk about the technology bit, what's happening out there. Now, the warehousing logistics market, they're growing because of the growth in e-commerce. And I'm sure you all have your phone and you're paying things online and you're buying things online. So if you look at the Southeast Asia internet economy, the forecast is that it will reach $1 trillion market by 2030. That's huge. I can't even compute that in peso today. But locally as well, according to, this is from the Department of Trade, the e-commerce contribution to the Philippine economy has risen, and it is now at 1.2 trillion pesos already. That's the expectation this year. From a mere, 600 billion 2 years ago. There's a lot of growth out there, and any business owner right now, any company, all the companies out there, they're present online. They have a website. People can see them. People can look up. People can find out about their product easily today. And if you're not there yet, then it's a problem. So the e-commerce industry, as shared, just to give some trivia or information here, people are buying a lot of food online. That's number one. Second is toys, hobbies, because I guess a lot of people got bored when they're just staying home. And then finally, furniture, appliance, because people are most of the time at home. You want your place to be even more, comfortable, presentable, and if you can afford it, larger. So we've seen people also buying properties in the beach area or bigger homes to have and accommodate all the work that they're doing. In the past, kids are staying at home, but now kids are back to school. So that's why the traffic is there. Now, a bit on this, because this is something new, the Real Estate Investment Trust, and I'm sure you've heard of this, and I can't finish my talk without discussing this. These are the opportunities also, and many big developers, as you can see on screen, they have a Real Estate Investment Trust, and so far they're performing so well, and big, in the first world countries, they have this very successful. That's why we want to have this also in the country. So far, the big companies, the big developers are doing well in this front. If you look at their performance quickly, you'll find that, the market cap is quite big already, 43 billion peso on average, and the revenue is positive. What they've, forecasted or promised the investors, the yield estimate of 6.768, almost all of them, the average dividend yield is 6.750. So that's good, meaning they're very near to what they have committed and expected. And it means that the REIT is actually a very, quite stable vehicle, another real estate investment vehicle out there. And of course, I'll touch a bit on the marketing technology bit, digitalization that we are doing and many companies out there are doing. Just quickly, company website, I've shared that almost everyone now, they have a website. properties. You can find it online. You can Google it and search everything. So somehow you should be able to do that. Otherwise, your broker should be able to provide you with information. There are, YouTube virtual vlogs. In the past, you have to go back and forth and see the property. Today, usually the final inspection. So I will not advise you to just buy properties without looking at it. It's a very big investment. You have to go feel it, see it. Sometimes I don't think people can just buy a multi-million property without even looking at it and feeling the area. If there are instances like that, I would think it's not that, it's not normal, it's not often. And then there are these 3D virtual tour as well. You can see the whole area with that. And if you like it, then you can go and visit the site. And online property listings that are actually live, and you can see whether it's taken or still available. Developers, brokers are using this today. And the CRM integration, customer relationship management, somehow artificial intelligence is here, matching your property with the right buyer, etc., and helping us do our jobs easier. And that's it on the technology bit and on the property market. So again, just to summarize what I have shared, these are the key takeaways. I have a 3+1 here. So the office market, if there is something there that you should remember, as shared, it's a tenant's market, meaning if you are renting a property right now, it's the best time for you to either, move to another property, improve that, because rents nowadays is quite soft and you can negotiate with your landlord. So there are several options out there. Use that as an opportunity to save on cost also, sign a long-term lease, get your preferred building, your dream office, whatever you like, all over the Philippines, especially here in the metro. In the residential market, as shared, the market has started to stabilize in terms of prices. As we've shared, the BSP Residential Real Estate Price Index, there are many opportunities there in the locations that I've shown. So if you're in the lookout, it's actually time to start hunting again and negotiate and buy your dream property. The warehouse, the storage market, it's growing because of the growth in e-commerce, and it will continuously grow. Even in the provincial areas, people are buying things online. Now, the +1 is the property technology, which many companies, not just in the real estate industry, they're actually using it today, that technology bit. But for our, our side, it's we call that Proptech, property technology. It's, using technology to create a better service or a better project. And in a way, it will make us more efficient, agile. And now you see this, not just in the brokerage, but in the developers' side, buildings, in the management of the building, in the construction of the building. There are so many advancements in this side. So our next speaker will actually talk to you more about that. But for now, this is my talk about the property, and I'll be very happy to, of course, answer any questions later that you may have. This is what we do. If you need help with the real estate, with your real estate project, you may call us online. These are just some of the companies, and I'm proud that we've worked with them and continuously working with them. And you may follow us online if you want to know more about what's happening out there, get some advice, follow us on our social media. And technology is that, right? We're talking about digitalization and all that today. And of course, my co-founders, my contact details here. Again, pleasant morning, everyone. I'll turn over the screen to the fourth. Thank you.
And Ron.
Okay. Thanks for your detailed blueprint of the prop tech industry in the country, Sheila. Okay. Okay. So regarding your prop tech presentation, Sheila, we have a skyscraper of questions to ask, but we'll hold most of them for later during our open forum segment. In the meantime, perhaps we can allow 1 or 2 questions. The fourth, do you have anything to clarify regarding the talk of the Lobien Realty Group?
Actually, Ron, before we get into that, I'd also like to thank the Chamber of Real Estate and Builders Association, or CREBA, for being one of our special partners making today's forum possible. Now, Sheila, Has your group had any interactions lately with CREBA or perhaps in the recent past?
I have friends who are actually members of CREBA, but us directly, not yet.
Mhm.
They do come to us from time to time, some of my friends, for information, updates. They want to know what's happening in a certain market, and we freely give them information. There are a
Yes,
lot of other
I
groups
noticed
on
you have a
this.
very comprehensive view of the industry in terms of the various segments that you can have in terms of real estate. I was wondering, there seems to be a lot of extent in terms of technology, perhaps
Mhm,
apps or sources online that allowed you to be able to put together this information and
mhm.
present it in a more concise and easy to understand way.
That's
Do you have
true. That's true.
do you have any go-to apps, perhaps, or
The do
organizations online?
good.
Yep.
No particular app yet, but today in this time and age, it's easy to do your own research. Unlike in the past, right? You
Mhm.
can look at several sources online and get the most updated information. And if you know people inside, you can also call them and get the information that you want. But in terms of marketing, I'd say in the way we do business, especially in the last 2 years when it was not that easy to go out, meet people, what helped us a lot actually is, the Zoom, the Microsoft Teams, when people are not free to go out or not that willing to see you in person, there is
Mhm.
this online technology that we've used to facilitate the relationship building, information sharing. But again, nothing will replace the face-to-face interaction, right? That's why everyone's rearing to go back and do live conferences. And I've attended several in the last few months. And I'm looking forward to the Manila Times first live conference as well this coming October.
Yes,
So
looking forward to that.
nothing, of course, can replace the human interaction. But what helped us, during the toughest time really is the technology that we have. We're able to share information via social media, Viber, WhatsApp, etc. I'm not promoting anything in particular, but the technology bit helped us a lot there. And then putting everything online, having our own CRM, the customer relationship management system, to adapt, to be more agile, and to, of course, go paperless somehow, digital. That's easier. Recording, management, tracking data, tracking information helped
And
us with
analysis,
certain,
yes.
yes, making your analysis easier than using Excel all the time. But Excel is still reliable, of course. The accountants love that. So my husband is a finance guy and he loves his Excel so much. So
Well, thanks for clarifying those points, Sheila. We'll connect and map out those